Right, welcome back again. It's another day, the 10th of August 2026. I'm trying to prep you on the way market played out. We're using our strategy together with orbs to see how we can milk the market. Okay, orbs. 9:30 New York time, you map out your high and your low. Now look at the range of the candle of 9:30 New York time, okay, which is also a plus. Okay, now 9:30 New York time, we map out our high and our low. Remember, it's yellow we use, right? 9:30 New York time, our high and our low, right? Oh, this is 9:45, this is 9:30. Sorry, let me delete this. 9:30 New York time, right? Our high and our low. Okay, so what do you think is the next thing we're expected to do? Go to higher time frame. Either we're seeing a rejection, other block, an engulfing bar. What else? You get which will frame an institutional reference point, which will frame our trade. So a higher time frame usually is the 4 hours. The highest time frame for this strategy is the 4 hours. Okay, now what do you see? The 4 hours here, we are faced with an engulfing bar. Okay, so we trace our engulfing bar from the top of our engulfing bar to the bottom of our engulfing bar. We have our red. Okay, now on this red, we have I want to see something in the higher time frame to know whether this engulfing bar was just a play, or we actually there was something that made this engulfing bar play out. Okay, on the higher time frame, we had this. So let's always look at the higher time frame whenever we see an engulfing bar at 4 hours or anything, okay, to see if the higher time frame is acting based on a bigger time frames rejection zone. Okay, are you getting me? So this is showing the rejection zone on a daily, but remember our highest time frame is 4 hours. So 4 hours was the one that gave us the engulfing bar. Okay, now this engulfing bar at 4 hours now is telling us something. What is it telling us? It is telling us to that this is our institutional reference point, right? So we'll go to lower time frame to see whether would have an engulfing bar from this. Okay, so no, let me this is what an engulfing bar here, for us engulfing bar. For us engulfing. Okay, now at this we move over to the lower time frame to see if we would see price reacting. So we go to 1 hour. Okay, remember this our engulfing, this zone here, it's a 15 minutes move. We can't find an engulfing here, right, from our 15 minutes. So we'll move over to 30 minutes. Okay, now look at 30 minutes. We have an engulfing here. Okay, even before the 15 minutes, I think we saw our engulfing of this in the 15 minutes, if I'm not mistaken. Okay, yeah. Okay, so you see the engulfing here aligns together with our 15 minutes up, right? 15 minutes up. Now, what happens here? We are expected to check for engulfing in engulfing. Engulfing in engulfing. We'll move over to our 5 minutes. Our 5 minutes. Now, look at our 15 minutes. Let me go over to our 15 minutes. Look at the candle that engulfed. Is it true? Yes. Now, move over to 5 minutes. Remember, we have a break of structure, change of character, return back, and all that. Now, at that, if you look at the candlestick pattern, you will discover that there is a break of structure. Is it true? Yes. There is a change of character. Is it true? Yes. Okay. Now, this change of character here becomes our consideration for our first take profit. Consideration for our first take profit. Now, that being said, we come over to our candlestick. Now, if you observe clearly, you will see that this is here is the candle that engulfed in 15 minutes down to this point. Okay, candle that engulfed in 15 minutes down to this point. Is that correct? Very correct. Now, as it engulfed down to this point, what are we expecting? We're expecting price to take out the engulfing candle. That's engulfing in engulfing, remember, right? Now we have an engulfing candle here. We also have an engulfing candle here. So basically, maybe you saw the price while it was still here and you're waiting for price to go back. It's expected that you draw your line here and wait for price to retrace back into this zone and then retrace back also into this zone. Why is it this zone 2? Because engulfing in engulfing, the funnest part of the whole thing is we have two engulfing. Okay, let me shift this. We have two engulfing. Engulfing 1, engulfing 1, and another engulfing 2, engulfing 2. Okay, now these two engulfing is expected that price get into it. Now, another thing I want you to observe here is the fair value gap that represented itself here between the two engulfing. Fair value gap is blue. Okay, now what do we see? What do we see now? Price cleared this engulfing. Is that true? Price cleared this first engulfing 2, cleared engulfing 2. And then remember, at this point, after price cleared it, we're expected to wait for an engulfing or a morning star to give us a clue to enter. Secondly, you can actually wait for price to clear this engulfing, because in some cases you find out that that price generally would ignore this engulfing here and come to clear this one. So sometimes some traders would wait for price to react around here, but here I think this fair value gap here now gives us an opportunity, okay, to ignore this and focus on this. Now what happened? Price came here and gave us a sweet engulfing bar combined with the morning star because it broke this point. retraced back and swept down, swept our first take profits. Okay, swept our first take profit. Now you can decide, okay, you do not trust this. You can decide to wait for price and see what price will do here. Since price is giving us a swing at this point, if you go to a lower time frame, you're expected to see a left head and right shoulder pattern and then an entry. Okay, now look at it on the 1 minute. What do you see here? What do you see here? Price is giving us here. Price is giving us here, right? This is a left, a right, a left, a shoulder, a head, and a right shoulder. Okay, I think we had a mistake here. Let's do it again. It's a left, a head, and a shoulder pattern. I don't know what's wrong with this thing though. Let me just know. This is it. Okay, now look at it. Price even broke from the left. Price broke. Okay, so let me just delete 2 so that we can see it properly. Okay, see what price did here. Price broke. Okay, the left, the right head, the right shoulder, but before the right shoulder, price has already broken. Remember, this fair value gap has given us an opportunity to enter. We have an engulfing bar already. We are looking at confluence, right? Engulfing bar already, no problem. It gives us a left, right, head and shoulder pattern, which is here, right? It now gave us a retracement and then a move. However, if you decide, okay, in the 5 minutes time frame, you then decide that, okay, you are not going to trade this engulfing here. You're not going to trade this engulfing here. But however, just take care of this swing. This swing here now gives you an opportunity to look for a head right shoulder. At this retracement here, you enter, place your stop loss here above the engulfing bar here, just a little above it, and you target a 1:4. I targeted a 1:4. Yes, 1:4. And look at what price did. Sweet and smooth. Price even gave a 1:6. A 1:6. Very sweet pattern. Borrowing left head, right shoulder pattern. Looking for a swing. That's at entry. I'm talking about at entry, right? A swing, a left right head shoulder, a fair value gap, an engulfing bar, 4 confluences in line with your bias, and then we move. Okay, and that's why we have this trade. 250 pips, good risk to reward. We're only risking 50 pips for 250 pips. Is that not something to be proud of? All right, peace and love, don't play.